Hey guys, it is Julie here with JT.Wealth. In today's video, we are discussing the Chinese electric vehicle maker NIO. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we are discussing NIO. So we're going to do a really quick overview of the company and focus in on some news that caused NIO stock to jump over 20% today. We're then going to take a look at why some people think NIO is the next Tesla, but also why some people completely disagree with that. And just before we dive into all of that good stuff, this is just your friendly reminder to please consider subscribing to our channel. Really helps us grow and helps you stay up to date with all of our latest videos. And make sure if you enjoy the video that you give it a big thumbs up too. Of course, don't forget to check out some of the great links in our description down below, which includes a link to my Patreon page, which will get you access to our Discord chat group, plus some great referral links if you're looking to start up a new investment account. Right now through Webull, you can get 2 free stocks for signing up and funding your account through the links below. Okay, so those of you who are maybe unfamiliar with NIO, they are a pioneer in China's electric vehicle market. And outside of their electric vehicles, they also drive new technologies in connectivity, autonomous driving, and artificial intelligence. Now, the first car that NIO developed was the EP9 supercar, which they introduced in 2016. As you can maybe gather from the look of this car, this was very much a sports car. It is a 2-seater and really put them into that premium vehicle space. Then in 2017, they launched their first volume manufactured electric vehicle, the ES8, which was a 7-seater all aluminum alloy body premium electric SUV. This was then followed by the ES6, which was a 5-seater high-performance premium electric SUV, which was launched in December 2018, and deliveries took place in 2019. And then most recently, they announced the NIO EC6, which is a fully electric mid-size luxury crossover SUV that just came available this summer. So it has been a busy few years for NIO, and that has been reflected in their stock price as well. If you look at the 1-year history here, NIO's stock price is up over 1,600%. 1 year ago, it was trading at lows of $1.36 per share, and today we're well up above $20. Now we know that the EV market as a whole has been booming this last year, so it isn't a huge surprise that NIO is suddenly seeing this great level of success in their stock price. But today, I want to focus in on what caused their stock to jump up 20% today alone. And that is largely in thanks to an analyst named Nick Lai. Now, Nick is a JP Morgan analyst, and he recently upgraded NIO to overweight from neutral with a price target of $40, up from $14, so a huge increase there. Lai wrote that the share of China's light vehicle market held by new energy vehicles, China's catch-all term for hybrids, fuel cell vehicles, and battery electrics, is accelerating and will quadruple by 2025. So Lai sees that as a rising tide, driven partly by Tesla's recent emphasis on the Chinese market. And that rising tide is going to lift many boats, including and especially NIO's. Lai expects NIO to be a long-term winner in the premium electric vehicle area. And this is in thanks to not only strong products and relative financial strength, but very importantly, backing by economic development authorities in China's industrial province. So the stock has already run up sharply in 2020, but he thinks the current valuation leaves room for meaningful upside over the next few years. Now, if we look at year-over-year numbers from NIO, you can see that those are strengthening too, as their vehicle sales and total revenues both increased 146.5% year-over-year to $493.4 million and $526.4 million respectively in the second quarter that just ended in June 2020. So their gross profit of $44.3 million indicates significant improvement from the loss reported on the prior year's quarter. And also up was NIO's vehicle deliveries, which for the quarter ended in September had a 154% year-over-year improvement. Now, looking towards the future, we have the 4th annual NIO Day coming up in January. And this event is where NIO typically showcases new technology and products. Now, NIO is expected to launch a new high-performance premium all-electric sedan, the ET7. Now, this ET7 will likely compete against Tesla's Model S. Now, speaking of competing with Tesla, let's take a look at two differing opinions here on how similar NIO and Tesla actually are. And first up is this Seeking Alpha article about how NIO is priced like Tesla in 2013, how they posted another monthly record with their September deliveries, and triple-digit growth in monthly and cumulative sales is a positive for future growth and performance in the competitive EV industry. Now, we know that the EV sector has been quite red hot, with all-electric leaders NIO up nearly 800% and Tesla up over 350% over the past 6 months. With that in mind, NIO's shares look to be priced just like Tesla in 2013, in its similar phase of growth, as strong growth for NIO likely lies ahead. Now, month after month, NIO continues to set new records for their monthly vehicle deliveries, and they're continuing to build upon that as they expand their monthly capacity. But they are still small in comparison to Tesla's deliveries and capacity in China, yet the Chinese EV market has shown signs of a recovery from pandemic-related slump. Now, of course, NIO still lags in comparison to Tesla as far as deliveries of vehicles go, but NIO definitely has time to still grow into its full potential. They expect that their annual production can get up to 150,000 per year without significant investment. So that is a 150% increase compared to September's 5,000 units per month. And if we take a look to NIO's and Tesla's price to sales ratios, NIO and Tesla are valued almost identically based on the price to sales now and have been quite close since July. The two tend to trade in sort of a tandem as the EV sector has gained momentum. Yet, NIO has a higher revenue growth projection like Tesla had in 2013 simply because its revenue streams are a mere fraction of Tesla's. So NIO does have a certain growth potential value added to their shares, but that's certainly not enough to keep justifying this multiple. It needs to find that profitability. And they do say that NIO is still 5 to 6 quarters away from showing that profitability as it still has net losses. But that is also reminiscent of 2013 Tesla. And with continued execution and strong quarters, we could see that profitability arrive sooner than later. They also point out that the EV industry is vastly different now than what Tesla was working with back in 2013. Now, they say that NIO is a small fish in a big pond, but it is a fish that is growing quickly. But as NIO continues to grow, can it continually keep taking market share, not just from Tesla, but from already established leaders in Chinese EV sales? NIO will be racing against Tesla and other auto companies in that space, which could prove difficult. And they do have exciting growth metrics in monthly and cumulative deliveries and prospects in their BaaS and autonomous tech, but it's far from profitability. Valuing NIO almost identically to Tesla, which has the upper hand in market share, deliveries, global sales, and proven profitability, makes NIO seem priced at perfection, even with similar strong revenue growth projections ahead like Tesla had in its initial growth phase. So they do sum it up to say that NIO may need a little bit more time to prove that it is worthy of being valued similarly to Tesla, with that coming from sales growth, market share, and steps closer to profitability. Now let's take a quick look at this Investor's Place article that says 3 reasons why NIO stock isn't the next Tesla. NIO has enjoyed an incredible turnaround this year, but the valuation of NIO stock is excessive at this point. Now, this article poses the question, is it time for NIO investors to take their profits on NIO stock? As many bulls argue that NIO still has more room to run and that buying its shares now is like buying Tesla stock back in 2013. However, that analogy is wrong. NIO stock is nowhere near as compelling as Tesla shares were, and here's why. The first point that they make is that NIO is not comparable to Tesla 7 years ago. Now, yes, NIO is at the early stages of development with a lot of supposed runway ahead of them. But the size of the two businesses is very different. In 2013, Tesla generated $2 billion of revenue. NIO, by comparison, has brought in $1.4 billion over the last 12 months. Not too bad, but we need to look at the margins. NIO has lost money merely on the production of its cars. Its gross loss on the production of vehicles that it sold over the past year came in at $46 million. That's before salaries, overhead, marketing, and legal expenses. Tesla, for all the criticism it gets, has always made a gross profits on its cars. In 2013, Tesla brought in nearly $500 million of gross profits on its $2 billion of sales, earning a respectable 25% margin. The second point they make is that NIO is not the market leader. Now, Tesla had a huge advantage being the first to the electric vehicle party back in 2013. So NIO just won't benefit from that same type of attention and free marketing that Tesla did. And when you take a look at the already established EV market in China, Tesla does have the largest share. Through the first half of 2020, Tesla had a market share of more than 20% in China. And even if NIO later becomes the top EV maker in China, it will face brutal competition. As it stands, Tesla, who is the sector's current leader, sells fewer than 1 out of every 4 EVs bought in China. So that just shows you how many EV brands are already competing in the nation. And their third reason is that NIO shareholders face more corporate governance risk, as China has long prohibited foreign investors from buying the shares of many of its firms directly. And as a result, investors have had to buy shares of holding companies listed in third-party jurisdictions such as the Cayman Islands. More broadly, China refuses to allow internationally accepted auditors to review local companies' filings, and this causes them to have to scrutinize Chinese firms' numbers more carefully. That issue becomes very relevant at times, such as early this year when it was unclear if NIO would be able to pay the interest on its bonds or not. There's nothing wrong with trading Chinese stocks, but beware, there's more of a risk holding a Chinese stock as a long-term investment than owning shares in the US or other markets with higher regulatory standards. So Ian's verdict on the stock is that shareholders are paying far more for NIO stock now than investors were in Tesla back in 2013. At that time, Tesla had a market capitalization of $5 billion, whereas NIO is already up to $30 billion and offers far less in terms of results. But Ian says EV stocks are incredibly hot. In this frothy environment, NIO shares could continue to move higher. I certainly wouldn't want to short NIO stock right now. However, at the end of the day, NIO has a $30 billion valuation and delivered fewer than 5,000 vehicles last month. That's simply absurd. The stock owners should enjoy its momentum trade as long as it's working, but don't lose sight of the company's underlying weak fundamentals. NIO will undergo a massive correction when the market winds shift. So some very interesting differing opinions there on NIO and their comparison to Tesla. Personally, I'm not an investor in NIO for no other reason. It's just not one that I got into soon enough there. And this video is in no way a recommendation to buy or sell any stock. This is just for information and entertainment purposes. Any trades should always be made based on your own due diligence. But what are your thoughts on NIO? Is this growth sustainable? How high do you think it can keep going in the future? And how does it compare to Tesla? Let me know in the comments down below. You know I always love hearing from you guys, so please share your thoughts on this investment. If you made it all the way to the end of the video here, make sure you give us a big thumbs up and that you're subscribed as well. Thank you guys all so much for watching. I hope you have a fantastic day, and cheers!